Good morning, everyone, and thank you very much for joining. This is the DAX Open with myself, Russell Shaw. I'm one of the senior market specialists at FXCM, and my email address rshaw@fxcm.com. Today is Monday, 24th of January 2022. Just going to bring up our high-risk investment warning, and I'm going to keep this on screen for a few moments. Over the weekend, I was taking a look at the Netflix financials. I know there was a big rout in the market last week. I found the financials quite interesting, so I'm going to write an article on that and put it on Insights. I'll put it on the on Telegram. I think we will probably be able to do the US Open later this afternoon. So I'm expecting that the invitation should go out as if we're going ahead with it. Here's our market commentaries disclaimer. I'll keep this on screen for a few moments. Hey, good morning to you. Nice to have you in the webinar. Hope you had a good weekend, and welcome to everyone. Hope everyone had a good weekend. Let's just bring up our references. MarketScope 2.0, tradingview.com. I am going to read from the CNBC morning note, so we get an idea of the basic news headlines. And the headline, I'll just bring up the chart as well. The headline is fairly concerning headline. European markets head for lower open as Ukraine concerns rise. And then we have the Fed meeting ahead. I'll just read the news. European stocks are expected to open lower on Monday as investors brace themselves for the next meeting of the US Federal Reserve this coming week and watch for developments in Ukraine as tensions with Russia grow. European markets are set to follow their Asia-Pacific counterparts lower on Monday as investors react to heightened tensions between the Ukraine and Russia. And look ahead to the US Federal Reserve's monetary policy meeting this week. The Fed is due to meet on Tuesday and Wednesday to decide on the next steps for US monetary policy. Rising inflation is a major concern for the US Central Bank, and investors will listen closely to how worried the Fed actually is. Chairman Jerome Powell is due to brief the media. The article says Wednesday afternoon, but it would be evening in sort of the European, Central African time zones. And that's going to be after the FOMC releases its statement. In the meantime, markets are likely to be shaken by concerns that there could be an imminent military conflict between Ukraine and Russia. The US State Department recommended Sunday that all US citizens in Ukraine depart the country immediately, citing Russia's extraordinary military buildup on the border. Our recommendation to US citizens currently in Ukraine is that they should consider departing now using commercial or privately available transportation options, a senior state official said on Sunday. On Saturday, the UK accused the Kremlin of seeking to install a pro-Russian leader in Ukraine. Russia has repeatedly denied that it's preparing to invade its neighbor. In terms of earnings, because we're now in the middle of earnings season, earnings are due out from Philips on Monday, and data releases include UK and Eurozone flash purchasing managers index, and that's going to be for January. All right, so those are the headlines. Let's take a look and see what's happening on the actual prices themselves. We'll start off with the weekly chart, and let's see if we can make sense of this. And it's you can just see this big red candle on for last week. This is the weekly. Yeah, I just want to go down to the daily here for a moment. So let's just go to the daily. And the reason I want to go to the daily is you can see that the sell-off took place on Friday. So Friday was a massive day for the markets, a massive day for the weekly chart. It effectively gives us a confirmed reference candle to the downside. So let's just go through this. So this arrow, this up arrow, I'm going to delete, okay, because that's not the active. That's not the active reference candle. The active reference candle is this guy over here. Okay, so this is the candle that's got the highest high in at least a 3-candle cluster. So you can see the candle to the left has a lower high, the candle to the right has a lower high. That's condition 1, and we need 3 conditions. Condition 2 did take place 2 weeks ago. It took out the reference candle's low, but we didn't get condition 3. Without condition 3, we've got nothing. So then we made a statement last week. We said, okay, there was no bearish follow through. We're going to require more from the bears just to prove that they're in control here, and that they did. Okay, so last week we lowered the condition for conditions 2 and 3. This candle here drops through the new line in the sand, and it closes below the new line in the sand, and that gives us the 3 conditions. So we've got this bearish turning point on the weekly candle. So let's get rid of this as well, and let's do some trend analysis. Let's take these out. I'm not sure if we need these right now. Okay, so the trend analysis, as I see it, is as follows. We've got a reference trough over here, and we've got a reference peak over here. And this is over a 2-week period, so it's not even a sustained swing. So we getting price action in a very sort of constrained range. So certainly one can make the case that we're not even trending, but we're kind of getting this price action between these 2 green sort of rectangles. So within this narrow range, we've got a reference trough, reference peak. This is now the higher trough, okay, and this is now the higher peak. So that's the uptrend there, okay. But then now we've got the serious reference candle, and what we're going to do here is we're going to put in HT question mark, because maybe if we want to take the optimistic view, maybe this is a correction that's a dip that's worth keeping an eye on. However, let's take these out. I'm just finding them distracting now. The point is that the trend's taking place in a narrow, it's taking place within that consolidation. So whether we really have a trend or not, you can argue, right? But how would we know if this is going to turn into something more severe? So we've got a higher trough, higher peak. How are we going to know if this is going to be more severe? Well, we'll put down two cases. First would be moving this to what I've used as the point to mark the higher trough. In other words, if we fall through that, well, then we can safely say, well, we don't have a series of higher trough, higher peaks. What we've got then is a lower trough. Well, as soon as we've got that, we can't make the case for an uptrend anymore. So if there is a huge sell-off this week and we take out this level here, that's it, uptrend gone. Okay. It doesn't mean a downtrend started, by the way. It doesn't mean a downtrend started, but it does mean the uptrend's gone. What I think could be, what would be more, not sure what the right word is, malignant, would be something like this. Excuse me. And let's take this out. Would be something like this. Some sort of rally, okay, and then some sort of breakdown like that. That to me would be worse, because this would be a downtrend. The first one would just end the uptrend. It wouldn't start a downtrend. The second example actually starts a downtrend, because then we've got a peak, trough, lower peak, lower trough. So this would be the dangerous situation. Not to say that when I say dangerous, I'm talking in terms of bear trends, because we're on a weekly chart. A movement down here would also be, quite devastating, but it's not the start of a downtrend. But if we have a huge decline like that, and then we have a bounce like that, and then we have a decline like that, well, there's the other sort of, I guess, a third option. That's another bear trend. So you can see that those are the possibilities. None of them have materialized yet. Okay, so how are we going to handle it? Well, we're actually going to go in perhaps a surprising direction here until proven otherwise. We're going to keep in HT question mark. Okay, in other words, we're giving the trend the benefit of the doubt. And that feels tough to me, because I'm really, this whole geopolitical tension is not sitting comfortably with me at all. But so we've got this higher trough, higher peak. We're going to keep in this HT question mark, subject to correction. Okay. Now, if we've got this HT question mark, okay, well, a contrarian strategy would suggest we should be looking for dips. And I'm not sure how you guys feel about that. Please go ahead and comment, because that would be quite a contrarian way, I think, to how people may be looking at the market currently. There's a few comments here, so I'm just going to take a look and see what we have. Okay, so Howard's just writing cryptos have taken a beating, so we can take a look at cryptos. And Peter's reading of the market is that morning, Peter. So he's reading here the weekly and the daily seems to be giving on his analysis sell on all indices. Okay, and then Andy's actually taking a separate view. He's saying he's looking to perhaps buy a dip on 15,000. So what this is all telling me, by the way, is that it's a hard market to read, because we're all kind of looking at this and we're thinking, this is what I think is happening. The risks in the market are still there, and these risks, I think, need to be repeated. We've spoken about these, I think, a fair amount over the last 2 weeks. And what is the risks? One word: uncertainty. Remember, that is the definition of risk in the financial markets. Uncertainty. When there's heightened uncertainty, there's heightened risk. And that affects all of us, whether we are on the bullish side, whether we're on the bearish side, we are all susceptible to risk. And that's what I really want to hammer home in this morning's webinar. Whichever position you guys are looking to take, you must have stop losses in, you must have risk management in. Heightened uncertainty, heightened risk, and risk is asymmetrical. It's asymmetrical in the financial markets. It's the cruelest mathematics. It's the cruelest mathematical law. The cruelest mathematical application to the financial markets is the asymmetry of risk, and this cannot be overemphasized. you know, if I start off and just say, you've got $100, I think we've all heard this before. We've got $100, we lose 10%, we're sitting on 90. Okay, we make 10%, we're only sitting on 99. 10% profit does not offset a 10% loss. You can think about it from the other way as well. You got $100, you make 10%, you're sitting on 110. Okay, you lose 10%, you're back to 99, you've lost 11. So you see that the risk is always going to be more severe than the profit. And the more that is lost in terms of the risk side, the harder it is to benefit from the reward side. Given that, I also want to make the point that in a highly uncertain environment, you of course have higher prospects for reward, because that's the relationship, high risk, high reward. But everybody focuses on the raw reward, myself included, when we should all be focusing on the heightened risk. So just be very, very cognizant of that. So my analysis at the moment is I'm going to keep this HT question mark in, subject to correction. However, I'm not sure it's going to clear up the situation once we go down to the daily, because now we go down to the daily, look what's happening here. We're in the middle of bear area. You see that? We're in the middle of bear area. So there's certainly a case to be made for outright bearishness here. Let's just make this clear. What we want to do ultimately, okay, is we want to trade in an environment where uncertainty is lessened, because we're always going to have that uncertainty. And uncertainty is lessened, in my opinion, when the daily chart supports the weekly chart. We don't have that in this case. We've got the opposite. We've got an ambiguous situation where the weekly chart is still sitting in uptrend, subject to correction. The daily chart is showing weakness, and it's showing an expansion in the Bollinger's, okay, and is showing the momentum becoming exceptionally weak. You can see that by the stochastic. It's hit the 20. If we hang in that 20, then there's going to be pressure to the downside. So just to make the case for the higher trough, sorry, I want to go to this chart here. To make a case for the higher trough, the daily has to get out of this 20 on the stochastic. If I can't get out of this 20 on the stochastic, then we're in trouble on the weekly chart. This weekly chart then can capitulate. So we just want to be very careful of that. Nevertheless, longer term trend trumps shorter term trends. So just be aware, higher trough here, question mark. Now we go down to the daily chart. Yes, there is a, we're in the bear area here. That's really not a comfortable place to be. Comes back to the hourly. All right, so the hourly here, given the ambiguity, okay, between the weekly and the daily, I think that the pivots here become exceptionally important in testing resistance. Okay, so if the current sentiment, the daily sentiment, is what's going to dominate, then R1 becomes a potential target for shorts. Okay, you can see here's the support. Okay, turned resistance on the R1. So I think this R1 level today becomes a key level. So keep an eye on that. Keep an eye on that. In order for my weekly hypothesis to have any sort of relevance, the hourly has to get above R1. Let's talk about the bearish, the bearish case now. Well, you can see the bearish case is now really at the central pivot. We've got we've already got a bearish crossover here in the EMAs. Already got a bearish, so the next thing to watch is the stochastic on the hourly. If that hourly stochastic crosses to the downside, hits 20, I think we may be stuck in this 20 area at the beginning of the week, and that's going to really put pressure on my higher trough question mark hypothesis. I can't be clearer than that. The conclusion to all of this is that we're in a highly uncertain environment. The thing about uncertainty, it comes with the prospect of high reward. Don't get sucked into that. Treat the risk part of this as the stronger force. You must have, and Pete's got it here, he says run your stops tight. And I would agree with that, okay? So if you're a bull, run your stops tight. If you're a bear, run your stops tight. Don't over commit yourselves. If you're uncomfortable with this whole situation, look elsewhere. Maybe something else is trending. But this over here, you can see, is an ambiguous situation, and that's just something we have to acknowledge. Is there any questions here? I'll just take a look at the cryptos because Howard has just put a quick a comment in there. But if there's any other comments, just go ahead and type those in just to see what's happening on the crypto side. Just by the way, in terms of the Outlook 2020, it's complete now. So I've sent that on. It's getting quality checked. I do talk about Bitcoin. I do talk about gold. I do talk about the dollar. It's just a hypothesis. You know, who knows how the year is going to end? Nobody can tell the future. But just be on the lookout. So that's going to be out soon. And then if I can just remind you guys that, in fact, let me get this out into the chat. Next week, is it next week? Let me just see my calendar here. Yeah, next week, Thursday, so the 3rd of Feb, we're going to have an Outlook 22 webinar. I'll just put the link in here. Now, if you go into the Outlook 22, there's going to be a drop down there. So I'm using one link for 2 webinar times. One would be for Australia, Sydney time, and the other drop down would be for UK /ZA. So I've put that link in the chat. If you're interested, please go ahead and register. And I'm looking forward to giving that. I'm actually not giving that myself. It's going to be me and Nikos. And the whole idea behind it is we're going to be instead of sort of following a rigid structure, we're going to be quite loose with the structure and have it as an open discussion. I'm meeting with him later today just to see how we're going to include audience questions. I think we're going to have some sort of structure to when questions can be fielded. Otherwise, you know, we won't be able to progress. But please join us for that if you're interested. Just taking a look at Bitcoin here. I think the best way to look at Bitcoin is like this: 1, 2, 2, 3, 1, 2. So we've got quite a severe downtrend here, quite a severe downtrend. If we go down, you can see that the momentum here is increasing significantly. So again, for cryptos, as long as we stay around this 20 area, the stochastic, that is bearish underlying pressure. This stochastic has to get out of this 20 area and start making its way upwards. Otherwise, the selling pressure continues. Now, we've got the FOMC this week, and the FOMC is incredibly hawkish. And if you read the 2022 report, you know, the whole outlook, what I tried to do was sort of build a logical sequence off of the swivel in monetary policy from the Fed side. So I think that the Fed's meeting this week is going to be very important. And if they come in hawkish, that could put pressure on Bitcoin. It could put pressure on any commodity that is priced in US dollar. Oil, slightly different dynamic. We also addressed that in the Outlook 2022. There seems to be an excess demand there. So, okay, so how it's asking, is it a leading or a lagging indicator? It's most definitely a lagging indicator, Howard. All indicators are going to lag because they're derived off price, right? So they are second derivative of price. So they're always going to lag. We've got to accept that we are never going to buy at the bottom and we're never going to sell at the top. Once we accept that, then the lag in the indicators don't matter all that much. We just accept them. Know that if we can get in early enough and out higher, as close to the top as possible, well, that's the best we can do. But this is lagging, okay? But the whole point is, what is the trend? You see, this is the worry. This is the worry. It's staying under 20 for an extended period of time. That means that there's an underlying pressure for an extended period of time. If we go to the weekly, now you can't get overbought or oversold on a stochastic, okay? It's just going to stay under 20 for as long as there's a pressure. It's going to stay above 80 for as long as there's an upwards pressure. The weekly now is showing a severe downwards pressure. Let's add an RSI here. It might give us a little bit more information. Now the RSI is used specifically for overbought, oversold, because the stochastic can't do that. And the problem here you will see is we're not oversold yet. We're not oversold yet. So there is a concern there. There's a concern there. In other words, it could go lower before market participants perceive value. I hope that helps. Any other questions there? All right, let's conclude here. Uncertainty, tighter stops, money management. All right, looking forward to hopefully speaking with you guys later. I don't see any reason to cancel the US Open. If anything comes up, you'll know because the invitation won't be sent. All right, guys, have a great morning. Speak to you later.